Hey traders, welcome to our Raghee report. I am Raghee. This is my report. Happy Sunday evening, everybody. Hope everyone is doing well. And thanks again for all the well wishes. I am starting to feel more than half human. And so, other than sounding not so great, we are marching forward to a couple big things this week. Number one, we've got the second webinar, which is not in any way a replay of the first. We're going to be talking about intraday setups using volume, price-based volume. And that's where the bulk of this year has really shown. Everything that I teach is going to work on different time frames when it comes to volume. But when we talk about what's working right now, nothing is even close to how effective day trading has been easily since summer. So we're going to be talking about day trading specifically. I also have some weekly and daily examples for you all. Had some requests for a couple other things for you all to see for webinar number 2. So building that out right now. Trish has a good looking slide deck for that. And then remember, class is on Saturday. So we're a week away. Really looking forward to this one. It's really our one setup mindset of what is that one thing that we can anchor to, hang on to get us through this particular season of trading where we have the macroeconomic uncertainty and also what is the Federal Reserve going to do? I see a couple questions lined up for that. All right, gang, so let's get to it. As always, the show is about your questions. So let's kick it off. Very first one. How are you, Rocky? Good evening. Interest rates seem to want to increase in the short term. All right. Seems the VIX is poised to retrace higher. Dollar bounce, Treasury selling. Where does that leave stonks? Okay, well, there's a lot there. So let's unpack it. All right. And Rocky, don't worry about it, because even I misspell my name. Yeah, I've done that. Even I do. All right, so let's talk about interest rates. So for that, we're going to head on over to, oh, by the way, on Friday, I did a quick video. It's over at the Simpler Trading YouTube channel called Follow the Leader. And that one, for those of you that are wondering, where are the paths to the upside and to potentially the downside based on these levels that I've been talking about, check that video out. It ran about 15 minutes. Before tomorrow, it'll give you a really good idea of what it is that I'm looking for. So we did that on Friday. You can check that out. All right, interest rate. So we're going to start off with, I think, the most important interest rate. And by the way, here you go. This is let me take a pit stop here for a moment. What is the target rate probability that I talk about constantly, don't I? It is, I'm going to read it right from the CME website here. What is the likelihood that the Fed will change the federal target rate at an upcoming FOMC meeting, according to interest rate traders? So that's the Fed Fund futures. Analyze the probabilities of changes to the Fed rate and U.S. monetary policy as implied by the 30-day Fed Funds futures pricing data. So we're looking at a futures contract. We're determining what it is that's being discounted, what's being baked into the cake about what the next, not just the next upcoming meeting, but all the meetings that we have a contract for, where are the probabilities? Now, obviously, the uncertainty is going to be, further out. We know less about that, but there's still opinions being expressed about it. Now, if we think we're going to see higher rates, then that means that what has the market, that means we already know what the market has been, for the most part, discounting. And I will say that as we went into, and let me get my drawing tools here, this can't be something that we look at sporadically. It really has to be looked at every day. And ideally after jobs numbers, inflation data, and GDP, right? Or anytime that Powell or frankly any of the FOMC members speak. This is where the battle is taking place. Sometimes this is the tallest column. Sometimes, as you can see right now, this is the tallest column. 5.25% to 5.5% has never been the tallest column. Although the fact that it's even there and the fact that it's taller than the 4.5 to 4.75 speaks volumes about the fact that, yes, expectations for rate hikes are a little bit higher, but this is nothing that we haven't seen before. So please don't land here on day one or look at it sporadically and say, oh my gosh, rates are going. I mean, of course they're going higher. It's where are they heading to ultimately? And there does seem to be mostly a battle between 4.75%, 5%, this column right here, and 5% and 5.25%. So that's one picture for rates. The other picture for rates is what are long bonds and notes saying? When the equity markets rallied Friday, what was really interesting is that bonds sold off. Why is that interesting? Because if bonds are weaker, that means yields are higher. And normally equities don't like higher yields. What we want to think about is where are we in terms of the trend? And this is most definitely a downtrend on the long bond. So then we have the notes. Pretty much the same conversation here, gang, that this is in a downtrend and yields, while they're not hitting new highs, are still very much in that trajectory. So when would we hit a new high on rates? As we make a new low, right? We got to take this low out, right? So if we start making lower lows, that means that yields are making higher highs. If not, we're, in a fairly, well, in a place that we haven't not seen before. How's that for a double negative? We've been here before, been there, done that. So nothing new per se by way of insight into the downtrend or insight into higher yields. As far as the dollar bounce, the easiest way for us to track the dollar without needing the data from the ICE, the Intercontinental Exchange, is look at the euro. And again, nothing really significant here. Not really. Again, look at where the euro is. Is this anything new? No. Is it toppy? Yes. Is it overbought? Yes. This is looking overbought as it's just above the -1 standard deviation. We've been here before. Probably going to at least be a potential volume-derived upside target. But again, nothing new so far. So where does that leave stocks? Nothing new. Nothing new. Raghee, I'm walking you through the price action saying, are we seeing something that is being presented as a new high, new low? No, or are we just in a very established territory? We're in an established territory, right? And that's really where we are. All right, Prince. So thanks for the question, Raghee. Prince, the things I teach have finally clicked in my brain and now reflected in the P&L. I love it. I love it. Thank you for the persistence. I mean, you did it. I'm glad I can be in some way of help. I took an ES breach retreat on Friday and it did very well. Now my goal is don't do dumb things. I love it. I love it. Very nice. And congrats for, sticking with it until it clicked. Most traders fail because they constantly change what they're doing. They don't think of their trading as an engine block, that they're just improving. What most traders do, sadly, is that they just keep changing the engine block. And imagine I just finished watching the F1 race in Mexico. Imagine if in the middle of the race, they just kept changing the motor, the power plant. Imagine lap 20, they try it again. Lap 40, they try it again, etc. Right? They're never going to win the race. And unfortunately, a lot of traders do that. So what I recommend is start with a really good foundation and then just build on that, which is very different than, oh, here's a brand new engine. Oh, and here's a brand new engine. Oh, because it's so alluring. And if there's anything that's helped me stay the path and get successful and stay successful, it's once I found something that's working, I just try to tweak it to make it better. I don't go get a new engine. I just don't find that to be something that is necessarily productive. And a lot of traders, when I talk to them and I say, well, what's the process you're using? It's usually something along the lines of, well, I got this new indicator, or I just took this new class, and they're completely revamping their trading, which is fine, but you got to stick with that then for a while, right? So I hope that makes sense. And that's why I am super stoked about Saturday, because everything about it is all the best parts of this engine, of this foundation that I have. And a lot of you are going to find a lot of the pieces like, hey, I've got that piece too. And oh yeah, that's on my engine too. But the way that we're using it is probably the simplest that I've ever taught. And right now, it's the one that allows us to deal with what's happening now with volume, which is going to at least let me know that I'm not trading a particular level by myself. We cannot be alone at a level and have no one else see what we're seeing and expect the trade to work. And a lot of traders think to be there first is best. And that's actually for us not that good. We're not a hedge fund. We're not these hedgies on CNBC trading against each other with billions of dollars. We're not moving the market on our own. So it's really important that, like a great surfer, we find a wave and catch it. That's the difference. I'm a retail trader. I'm proud of it. I'm not going to pretend to be anything that I'm not. I'm not a giant trader. I'm not a small trader either, but know thyself is really important. And that means I've got to respect those bigger forces in the market, and that's volume. All right, next up. Let's see. Am I feeling better? Irish coffee. Miles, it's funny. Whenever I get a cold, coffee doesn't taste good. So I've been drinking a lot of tea and a lot of Topo Chico, and a lot of water. But I am feeling much, much better. Thank you very much. I don't know that I sound any better, but Bob, thank you. I don't know that I sound any better, but I am feeling a lot better, which is good because we've got a webinar and a class coming up in less than a week. I can hardly believe it got here so fast. Corn on the daily. Groot. It's going to likely be a momentum break. All right, so let me show you something here. Sideways market, and then boom, 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 boom. What is that? That is noise. That is noise. Look, gang, our indicators don't know necessarily on their own what the directional bias of the market is. We do. So that means I'm going to ignore usually one half of the signals that I could be seeing. Those could be targets. They could be insight into where price could go, but they're not necessarily going to be entry signals. These are better off entry signals for us because we did have a very brief time in an uptrend. It does appear that the overall movement is higher. So this is where the process is so darn important. Although I will tell you what, Group, of all the things that I could put money to work in, I can't say that a sideways market is one that is going to be at the top of my list. So just forget the setup itself, Groot. For now, I'm just wondering if there's anything better on soybeans. No. What about wheat? No. I'd leave grains alone right now, Groot. I just don't see an edge. I just don't see an edge or even a reason to tie up capital, What about GLD? Well, let's take a look at gold. If we're going to take a look. So by the way, when you all see even last week's webinar and this week's as well, you're going to see a lot of futures contracts. And the reason for that is if I'm going to try to understand what gold is doing or crude is doing or the S&P is doing at the ETF level, GLD, USO, SPY, even SPX, maybe GLD is where we ultimately want to put the trade. But the market that we need to study is that more almost 24-hour market, and that's the GC futures. Now, if you're on Thinkorswim, you've likely got GC future access, even though you may not be trading it. You don't have to trade the futures. You don't have to trade the full-size contract. You can trade the micro, and you can trade options on the full-size contract. And you can, of course, trade options on GLD, which, again, that's choose your own adventure. But the cool thing is all those decisions are going to be made from this chart. And if I'm looking at gold right now, I'm more likely going to be a short seller. Here's what I'm going to do. -1 standard deviation. -1 standard deviation. So if and when we can rally to that point, which is just above 1700, Billy, then once GC gets there, I will look at what, if anything, I can do with GLD. So I'll look at GC to trade GLD. I'll look at ES futures to trade SPY, SPX, etc. So I hope that makes sense. All right, next up is RBLX. After earnings, I'm not going to play anything that close. Groot, if something is 2 weeks within earnings, I'm just simply not going to play it. Now, there is a very rare scenario, usually with a really good trend, where I'll look for a shockwave reaction. But that's not been something that we've had the luxury of since the markets have gone into chop. So I'm simply not going to trade into earnings, but you mentioned something very important in your question. What about after earnings? So after earnings becomes a conversation of where's support, where's resistance, okay, and then even where's support and resistance, volume-based support and resistance. By the way, gang, if you can read a line chart, I'm sure many of you have seen that. If you watch financial media and they show this, that one line of all the closes in a particular symbol, that's a line chart. If you can read a line chart, you can read the V-score. And that's the volume-based support and resistance. So I'd like to see either price and volume. That would be great when they dovetail. We need to get down to the lower end for a buy, or we're kind of at the upper end right now for a potential short. But after earnings, let's see where we land, right? As the dust settles, what do we have to work with, right? Okay, next up. Hey there, James. How are you? Can we take a look at DIA? Our puts, a good setup for this week. All right, so once again, DIA means I'm going to look at the futures contract, and that futures contract is the YM. And the YM futures would map to DIA. They would map to MYM micro, options on the YM. And therefore, what I want to do here, now you're looking for puts. All right, so if we want to get short, I mean, it's a neutral market right now. So we can absolutely look at where a market's going to be overbought, right? So we an overbought setup. We have resistance way up here. These are price-based levels. We have some resistance. These are all Darvis levels. So I know where my resistance is. That's all. So these are all price-based levels. Price, gang, is simply not enough. We can't just look at price and say, well, that's where the support and resistance are. Because here's what's really interesting. Each one of these bounces came at uneven levels. A price-based trader would say, well, that's a buy, or that's a buy, testing those levels, testing those lows. And then other groups of traders will say, when we break down through those levels, those are shorts. Who's right? Volume will tell you who's right. So I have zones of support via volume in these areas, and even more, a little bit more aggressively there. So for there to be follow through, I need to break down in volume as well. Well, let's flip that around now. Where's the resistance? It's just over the mean. So the mean in and of itself, gang, is not this end-all be-all magical thing. It's just a level. It's the average. The resistance in the Dow, the initial resistance we're going to run into is about just over, I'd say it's going to be about a plus 0.6 standard deviation of volume. We need to be a little bit higher, which if you're looking at price, you'd agree and say, Rog, yeah, I agree. We need to be a little bit higher before we can do anything. Absolutely. So I think we can all agree that it seems this peak is about halfway between the mean and the +1 standard deviation. Look what else is about halfway between. This is roughly halfway between. Look what else is kind of halfway between. Look at 34,000 halfway between. So this area here, call it around, let's see, about halfway. Yeah, look at around 33,680. And then once the Dow is there, James, short the Dow, short the micro, or get long puts. But I need to get up to that level. And then I'll take a look at, how do we get up there? what's the news, and then that might be an opportunity for the short. Yeah. All right. Let's see. Next up is ZB long calls. If so, how far out? Mm, I don't have a neutral trend anywhere, Martha. Now, some of you might remember I was thinking, hey, we got a minor low in here on 1024. We broke out on 1025, but ultimately we're probably looking at a short the rip. So I'm not ready for that yet. I'm not, and I won't do it from current levels. So if we get another minor low, then we could think about that. If we get another minor low, or we could look at a potential weekly chart breakout through, say, 122.25. Now, why a weekly chart breakout here? Why now? And the reason is Janet Yellen has, I don't know if it's going to be something that will continue to influence market behavior, but Janet Yellen has opened the door to some kind of expectation that the government could buy bonds, that the Treasury could start to look at buying those older bonds. I think the word she used was recycle. I don't care what she uses. I don't care what she does, right? I can't control. I'm not going to worry about something I cannot control. However, I will be aware of what I could do. And if that's something that's really going to have legs, Martha, I would say we need to complete the minor low on the weekly. All right. Thanks for the question. Next up, hey there, Matt. Hey, Matt, thank you everyone for showing up. Otherwise, I'd be talking to nobody but my cat, and my cat's not even in the office today. So I appreciate it. During my day trading, what is my preferred days to expiration? The closest one with the most liquidity. Matt, yeah, the closest one with the most liquidity. Because if the plan is to be flat, by maybe noon, look, last week, I was so tempted. I would never do this, but I was really tempted to say, look, take the class that's coming up, because if for no other reason, last week when I was with you all, I think I had 100-degree fever that night when I did that webinar on Tuesday. Monday, I started to feel achy and a 99-degree fever, and I had the flu for a good 4 or 5 days. But I traded. I only traded the first hour of the day. So I logged in with our members, Sector Secrets Mastery folks, Simpler Futures folks. I'm in a number of rooms, gang. So a lot of times when I'm sharing trades, like I've spent a lot of time in the options room, day trading room, futures room, mastery. I have 2 main rooms that I trade within. So, I have a lot of trades that go out to a lot of different groups. Anyway, when I was day trading, because I figured I have at least an hour's worth of energy and clarity, one day I even forgot mid-trade. I was feeling this sick. I even forgot which direction I took the trade. No kidding. I have to admit, I was a little embarrassed because I'm on the mic and we're trading, but I had my notes, I had my indicators, and I quickly found the horizon, right? Finally, I got my sea legs in the trade. And luckily the room said, no, Rug, we're short. We already took profit. I said, oh my gosh. Anyway, not that this is any indication of every week. We did not have a single loss. No, I take that back. I think in bonds on Friday, we had an aggro, moderate, conservative, the way I teach folks to scale in. And I think the aggro leg of the 3, which is the smallest leg, it's a 25% budget trade, got stopped out in some volatility. And then the market came crashing down. Moderate made money, conservative made money. And so, yes, I think we got stopped out of that one leg of the trade. I don't say that because I in any way insinuate that I don't lose. I lose plenty, right? Like many people do. It's just that I lose a whole lot less than I win. Our win rate since summer on our day trades is 72%. I've been crunching the numbers. It's 72%. So that means roughly every 10 trades we take, we win 7. Last week, didn't even lose. Why is that impressive? It wasn't because of me. It was because of the process. It's amazing when you're not feeling well, you don't have the energy to get all spirited and try this and try that. You just go right back to basics and just follow the steps. And I thought, wow, maybe I should, you know, maybe I should be sick more often. But anyway, I hope that, so we try to keep things as mechanical as possible. What's my preferred? It's always going to be, is there liquidity? What's the soonest? And I don't want to be thinking about, well, what if it keeps going into tomorrow? It's a day trade. And sometimes, Matt, I won't even be in the trade past 11:30 noon, right? And if I am, we've already scaled out and we're managing it purely as break-even stop or trailing stop, T2 or T3, second target or third target. So thanks for the question. All right, next up is, let's see. The indicators get blocked out sometimes. Yeah, they do. I keep meaning to move the charts up a little bit. Yeah, there we go. Yeah, they do tend to block out sometimes, don't they? All right. All right. Next question is, but yeah, normally I'm pointing to V score, and I don't think that got blocked out there, JR. But yeah, good thing to remember to do. Yes. All right. Next up is Axel asks, more of an investing question. Is the chart in Bitcoin showing a potential accumulation pattern? Ooh, Axel, I have not looked at Bitcoin in a while. Hang on. I think I get asked about Bitcoin mostly in Charts and Coffee, but I'm happy to look. So there's two places we would look. One is the daily. And the question was about an accumulation pattern. And I would agree, yes, we're neutral and we have a narrow range. Yes. On the weekly, no. On the weekly, no. On the daily, yes. Yeah. And take a look at the way in which we have quite a bit of support between about 18.6 and 17.6. See, about 1,000-point area of support if this neutral environment is going to persist. So that could be a really interesting one. Not until we break 25.2, though, do I think we get to the bullish hemisphere of this chart. But we could rally clearly for some time. And I don't want to be a buyer at 25 necessarily. I'd rather be a buyer of the oversold or support zone on the daily here. If I were, which I'm frankly not, but if I were, that would be a really good place to look. Yeah. All right. Next up, let's see. After I hit T1 and scale out, how do you know how much to keep and trail? So after I hit T1 and scale out, Martha, if it's a trending market, I'll treat it differently than if it's a non-trending. I'll look at support and resistance. I'll look at HPMRs. But when you say, how do you know how much to keep and trail? I scale out of half the position. I'm very mechanical. We get in, whatever I have, I'll scale out of half. And then whatever is left, I'll scale out of half of that again. So what I'm able to do is scale out of the first target of 50% of whatever I have. Futures contracts, options contracts, doesn't matter. Shares, half. And then I'll scale out of half of that, which is to say the other quarter. And then I'll have another quarter for a potential trailing or third target if that were to happen. I could have that very small position still out there if we just happen to have one of those days. So that's the process that I use. All right. Next up, STL signed up for the elite class. Indicator download does not include the Darvis. You can grab the free Darvis. Yeah. Darvis 2. Yeah. So Darvis 2, and that one's free. You can grab that Darvis 2. And let's see. I like the support and resistance. It's not a big part of the class, but it does make it really easy. And that's a free tool that we made available. So what's the difference between 2 and 3? Signals. The Darvis 3 has signals built into it. Signals for particular chart patterns is what it does. If you've got three, bring it with you. It will be helpful. If you don't have three, I'm going to be talking about the different patterns that I use because the whole process is built of three steps: volume confirmation, trend confirmation, and then finally the setup by way of a price pattern. And there's a few price patterns that I'll look at, not just the one from the Darvis 3.0, which is why we're going to use 2.0 so that traders just don't get lazy and only look for that one. You can look for all the patterns that I look for after we have the volume confirmation, after we have the trend confirmation. All right, so you don't need the Darvis on there. You really don't. I'll walk you through if you want to put it on there, but it's really not necessary. But again, my engine block has had the Darvis on there for a really long time. We're going to walk you through this particular layout. And then look, some traders will say, look, I'd like to have my squeeze on there. Hey, Rog, I'd like to add my slow stochastic on there that you've given me. Or, hey, I'll put the Darvis 2.0 or 3.0 on there. So I'll talk about some of those contingencies and some of those ideas. But again, it's really easy to download and add. And I'll make sure I share with you all the different things that you could do with that main engine block, right? We're going to go right back to that engine block, giving you a really good aluminum, beautifully machined engine block. And then, if you want to put other indicators on there, I'll talk about how they can be best used within the framework of this three-step process pattern. All right. So I hope that makes sense. All right, gang. And just like that, we are out of time. But you know what? Let me grab just there's two questions here. Miles and Greg, I'm going to grab those two and then we'll wrap this up. Call it a night. All right. Miles asks, let me get my charts back up here. Miles asks, XLV, let's see here. XLV, I'm in it long back from October 24. Nice. Closed 50% of my position on Friday. Beautiful. Any insight? Any insight? Gosh, let me show you how good your timing is. Look at this right there. Look at that peak on August 15. We are at a potential resistance area. It doesn't mean that we cannot go up a few more points, but I like how proactive you are, paying yourself while you can, not when you have to. We got a lot of Darvis resistance overhead, and we do have some volume resistance overhead. Nicely played. Yeah, Miles, nicely played. All right. Stacy, thank you. Yeah, hit the like. I appreciate that. Hang on, I got a cough. All right. Last question here from Greg. I had an HPMR from the earlier day trading class in TradingView, but now it's gone. So Greg, remember, those are always updated. They're constantly updated. So if you have an HPMR from me that's even more than 3 weeks old, it's already past its expiration date. And, I know some people will drink milk past its expiration date, but I won't. I certainly won't use HPMRs past their expiration date. So they're always being updated based on the current volatility in the market, because that's what it is calculating the support and resistance based upon. So if you had an older version, yeah, eventually I think we just pull them because they're no longer even valid. Yes. And so that's probably what that is. All right. So the newest HPMR versions you can find in two ways. I make the futures indices, the S&P, NASDAQ, Dow, Russell, available in the futures room and in the Sector Secrets Mastery, as well as the ETFs of the indices, the Russells, the S&P, the NASDAQ, the Dow. And then if you want the large list, stocks, ETFs, more commodities, energies, treasuries, gold, etc., currencies, and a list of stocks, that's the premium. So, unless you're really, really using HPMRs consistently, I wouldn't worry about it. But if you are saying, hey, Rog, yeah, I want to day trade all those symbols, and we've got our HPMR premium product, which is a far larger list of symbols. Okay, so I hope that makes sense. All right, gang, wrapping it up. What is an HPMR? It is an hourly price movement range. It is the zones on my screen that look like this. JR? Yeah, those are HPMRs, the process that I created many, many moons ago. using time and volatility to find support and resistance for intraday traders. And they are, well, let me show you before we wrap up here. Let's see what the ES is doing. Look at that, just kind of climbing along those HPMR support levels. NASDAQ, beautiful, beautiful. There's the resistance, there's the support. Very narrow volatility this time of day. The HPMRs reflect that. All right, gang, I'll see you tomorrow for Charts and Coffee. I'll see you Wednesday for webinar number 2. If you are a day trader, you will not want to miss this, okay? And by the way, I have heard, I don't know if it's for sure, but I'll have to double check, although I have some recollection that all 3 of the packages, Basic, Pro, and Elite, will have access to me in the Sector Secrets Mastery Room, which I'm really stoked about, because now after the class and after live trading, you can be with me. I don't know how long the time is going to be, but check it out. You can be with me in my Sector Secrets Mastery Room, and we can continue the conversation. And you'll get alerts from me also from the room, as well as from the trading if you're taking live trading. So I think that's being added. Don't hold me to it, but I do remember something about that. All right, so we're actually expanding the packages a bit. All right, gang, I'll see you tomorrow morning, 9 a.m. for Charts and Coffee. As always, thanks for being here for the Raghee Report. Thank you for your questions. If you have any questions, comments, feedback, requests, leave them below in the comments. Thanks for smashing that like button. As always, looking forward to seeing you Wednesday at 8 p.m. Be good to each other, gang.